Okay, once again, good morning and welcome to our AES today, the last of 2022 on Insurance 101. My name is Michael Johnson. I am the CEO of the HOALiving group of companies, which includes the great community management companies of FCS and CAM, A+, Idaho HOALiving. And if you are one of our clients, thanks for joining us. If you're not one of our clients, we're glad that you are here with us today. And if you're watching this on YouTube at a later date, we're glad that you've found us. So just a couple housekeeping things before we get into the topic today. Just a reminder that all of our training that we do is available on our website. Go to the HOALiving.com, go to the training tab and Association Essentials Series, and you'll see little video clips with the titles of all of the events that we've done in the past, all available to watch. And some of them we've done twice because we forgot to hit the record button when we did it live, so we recorded it again later. We won't tell you which one of those are. Those are surprise. There's some of the things that we learned this year. It was a great year. We talked about effective leadership and how to create and maintain a sense of community. We had a legislative review. We always do that every year, and a review of significant national legal cases from across the country, from our attendance at the law seminar, which is now just 2 months away in New Orleans this year. And it's my pleasure to attend and give updates. Then we talked about addressing water damage and had great insurance experts with us. And resolutions for your community association, the resolution process, funding and loans with Chuck from CIT. And that was a great session. We talked about budgeting and the effects of inflation, and last month association elections, what to know and how to prepare. And today we're going to talk about insurance, which is always a very popular topic. Once again, you can find all of those on the website. So we've had a great year here at the HOALiving group of companies, as we are, we're battening down the hatches a little bit, getting ready for a little recession and planning how to best take care of our associations who are dealing with the inflation as well as us. And just some of those things that we're able to experience this year. Once again, best of state in property management for the second consecutive year, as well as customer service and employee-employer relations, which I'm very proud of. Best of Salt Lake City, best of Southern Utah in the Community Partner Division. We celebrated our 23rd year in April of this year. Looking forward to our 24th, and already starting to talk about our big 25th in 2024. We participated at the LAC Day at the Utah State Capitol, Community Association Day, actually. And then largest attendance, we at the Bowl for the Cure this year got pushed back to summertime because of COVID last January, February, when it normally is held. And we were able to combine it with our company party and had a great time. And then this picture in the background is from our fall mindshare. We did one in the spring earlier, and just a delight to be able to meet with all of our employees and feel their energy and how much they love managing your communities and supporting those managers. All right, let's get into today. Now that looks like we've got a large group with us online, and talk about insurance. Now, remember, insurance is the juicy part, but really the foundation is managing risk. Insurance is a risk management tool. It's not the only thing. And if we're managing our risk, then hopefully we don't have to use insurance except for in catastrophic events. Risk management is the process of making and carrying out decisions that will minimize the adverse effects of accidental losses upon the community association. What are we talking about here? So risk control. We can do exposure avoidance, right? So we have rules in our clubhouses and at our pools that alcohol is not allowed. If you don't allow it, you're avoiding a potential risk in the future. Loss prevention and reduction. We have inspections that we do of our buildings and our facilities. We have fire suppression systems in our multi-story products that help us if there is a fire, right? Put that fire out quickly to prevent the loss and to reduce the size the loss would be if that was not in place. Segregation of exposure. We have backups and extra parts on hand for you that are in buildings with common chillers and boilers. Typically there's one extra if budgets permit. That is there and ready for to be put in case the installed equipment goes bad, or just our computer systems and keeping things stored in multiple cloud locations so that your data is both secure and available. And contractual transfers, right? When we contract with the landscaper, we put in that contract that they are responsible for the insurance for the work that they do, and that they will indemnify and hold harmless the association client. And we do that with most of our vendors that we contract with. So where do we find insurance requirements? Just a reminder, there are federal, state, and local laws that deal with insurance. If you think about, you know, so your home insurance, Fannie Mae, Freddie Mac have insurance requirements. Our state requirements for our associations, most insurance is state regulated. It's all state regulated, but there are some minimums that have to be met. And then case law, that of course. Association governing documents, we'll dig into that a little bit. Obviously is the main place we're going to find them. The secondary mortgage market lender requirements I just talked about up in federal laws, the pseudo federal private mix of that industry. Our contractual obligations. So, you know, when we sign a management contract with you, we have specific requirements that the association is going to ensure us, the management, your agent, if you've asked us to do something and that goes bad. Same thing, you have contractual requirements if we're allowed to be your manager that we must meet on our end as well. And then just good business judgment. If you're doing a large event as a risk management tool, then you're going to get insurance for that event. So reviewing the governing documents for your community association is where most of this language is going to be found. Reminder, if we look at our hierarchy of authority, and this is our HOALiving version of the documents with our foundational things at the base of the arch, laws and statutes, and then our declaration or CC&Rs with the plat, articles of incorporation, bylaws, and then the top or the least significant is the rules, regulations, and resolutions. So the circle popped up there for declaration and CC&Rs and the plat map. That's where we're going to find most of our requirements that we need to be following as an association in the insurance genre of things that we work on. So here's a couple examples of actual communities we manage. And if you look in, there generally is a whole article specifically dedicated in your CC&Rs to insurance. So always find that section and take a pen and a highlighter. You're going to look for different things like the word shall and the word may, right? In this example, the board shall obtain insurance as required in this declaration. And then it goes down and defines, you're going to do property insurance. Association shall maintain a blanket policy of property insurance, covering the common areas and all the buildings, fixtures, and equipment. So whether you have mandatory have to do it with the word shall, or you have a word may, you're going to have that. Plus, it's going to specify exactly what you have to provide insurance for. And so this here's the common areas and all buildings, fixtures, and equipment that are the obligation association maintain. Then it'll further define it. It says down there at the bottom of the blanket policy shall be an all-in or an all-inclusive insurance and shall include insurance for any fixtures, improvements, or betterments. We've talked about the Utah statutes quite a bit, and you can go back and find some of our previous sessions, but there are, Utah has some nuances different than, our other markets, Idaho and Arizona, that are very unique to Utah. We think it makes our lives easier and better in the association insurance issue. But you always have to go back to your governing documents here. So once again, looking here, number 2, you shall have a protection against loss or damage from, fire, windstorms, hail, riot, aircraft, blah, 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 right? 100% current replacement cost, a guaranteed replacement cost endorsement. The association shall keep an amount equal to the association's insurance policy deductible or $10,000 in a separate savings account. The state law in Utah requires the funds to be set aside. It doesn't necessarily have to be in a separate account, but these documents say it does have to be in a separate account. So make sure that you know that what you have to do there. Number 6 says the association's policy is going to provide primary coverage. Then once again, the documents are saying go back to that business judgment rule that we looked at that the opening slide and use the best business judgment that you as a board have. Number 8 talks about that you shall provide notice to all the owners. And then here it says shall have no obligation to obtain or maintain any insurance covering the owner's personal and real property in this association. So it's specifying that it can't happen. It doesn't happen at all. So the general liability insurance then is another. There's property insurance. Now we're at the CGL. And once again, there's the word shall. It shall be at least $1 million minimum. Also 8.4, you'll have directors' officers insurance. You shall have that. Theft and embezzlement insurance. You may obtain insurance. Workers' compensation insurance. You shall. The named insured shall be the association on these policies. So you can go through your documents and highlight, circle words, find out what you're supposed to cover and if it's mandatory or not. Earthquake, we get questions about earthquake insurance quite a bit, and whether or not, some owners believe it's a requirement. We've never really seen earthquake called out. It says they may get earthquake insurance, but there's not a mandatory shall in 99% of documents out there. Here's another example of some insurance covenants, and the example here in 6.2, it has to be an A-rated or better company, and you can find those lists online. So can't go get a discount insurance, and those lines do exist out there, but this is saying you need to not use discount insurance. There's another shall, may not. Those are your keywords that you're looking for. Shall. Once again, may not, void it, different things, shall be consistent with the provisions in the act. So 6.4.10 there at the bottom says that you will follow the code, the state code. So if the state code changes, then you're going to have to follow that regardless of what the documents say. This right here talks about the bottom underline is that the deductible will be $5,000 unless notice is mailed to all the owners. The typical is $10,000 deductible, and we're even seeing a move to $25,000 deductibles, especially now, as we talked about a couple months ago in the budgeting and the inflation AES, that their, associations are looking to maximize their dollar value. And so you will get a significant savings from raising your deductible from $10,000 to $25,000. There's that earthquake and flood example in 6.7 there. Association has the right, shall have the right, but not the obligation to maintain earthquake and flood insurance. So how do we So now we know some of our requirements for the law and the governing documents, but how do we understand what our exposures are and what kind of coverage exists? Basically, there are 4 kinds of exposures. Therefore, there's going to be 4 different kinds of insurance to cover those 4 different kinds of exposures. You have property exposures, your physical property, tangible and intangible. You have liability exposure, income exposure, and personnel exposure if you have on-site employees or even volunteers in your community who get hurt while working, in quotes, right, for the community association. So property exposure, your tangible property are your buildings and their contents, and the intangible is information, websites, things like that. You know, we have really done, knock on wood, very well in Utah, despite the super drought that we're in, limiting our fire exposures here the last 2 seasons. And that's quite a blessing. And other states aren't necessarily having the success, but all in all, this year it was a good year as far as a lack of fires. It's healthier for the air that we breathe for sure here in Utah, because we get the whole West floating into our valleys and getting stuck here, but also just the high cost of those insurance claims that destroy so much property. So property coverage, you have your commercial package, and then you got to understand and work with your agent on what does that really cover. Well, it's going to cover the building against fire and perils, things like that, but it's not going to cover your mechanical equipment. And so your boilers, chillers, and your major mechanical, that'd be a separate policy. Ordinance law insurance, if you are a building that was older and built before there was a fire suppression system required for that size of building, and you have a catastrophe that requires rebuilding, new permits to rebuild the complex, and now fire suppression system is required to get that permit to do the reconstruction. You had an insurance policy that covered your property. If you do not have ordinance law insurance, insurance will not replace something that was not there previously. And so when the city says you have to put in a $120,000 fire suppression system when you rebuild your building, then the insurance isn't going to cover that unless you have this ordinance law insurance coverage. So that's a very important one to have. It's not very expensive. Electronic data, obviously, and flood insurance is special because of government backing, and there's requirements, and you're in flood zones or not in flood zones. Flood maps are really old. That's a lot of contention and debate these days. But you don't have to live in a hurricane area to be affected by floods. Plenty of flood claims here in the Rocky Mountain area. You can go to, once again, to our historical data and find an insurance series we did 2 years ago on property coverage, and watch the property coverage one specifically. Each of these different kinds of exposure coverages, we did a 1-hour session on instead of this giant overview that we're doing today relatively quickly. On the liability exposures, then, this is, I love it, you know, coverage for bad things that happen to other people because of you. So if you have in your community and you have a giant pothole and it causes tires to pop, then that's not an auto policy, that is a liability policy, and you might be replacing some tires because of the pothole in the common area. If someone gets injured because they went to your community clubhouse and a socket or a switch shocked them for some reason. Personal injury, you know, we don't allow any of our clients to ever do this, but we've seen associations sued because they published a name on a website or a newsletter of the delinquency list. And so in an intent to shame people into pain, and that can get you sued under personal injury. And then advertising injury, larger communities that do newsletters with ads and those kind of things. You can misprint an ad or misrepresent, and that could also be a liability claim. So the different kinds of insurance in this liability exposure area is a CGL, that's your master policy. Separate that you would have to buy is if you have vehicles or if vehicles are used by anyone at the community. Technically, you're the president of your association, you're driving to Costco to pick up, a bunch of food for a big community party. You get in an accident that you caused and they find out that you were on association business. Now you have liability, not maybe through your personal insurance, but through the association's insurance, and you would need a hired and non-owned auto policy. So that basically hired and non-owned auto, it covers autos not owned by the association. Commercial liability extends the coverage limits, very inexpensive. We always recommend that. And the directors and officers insurance that we talk about so much for you board members is its own type of coverage. There's 2 seminars you can watch from the past, Understanding CGL Policies, and we did a special 1 hour just on directors and officers insurance, since that is so important. Our third kind of exposure then is income exposure. This is for the net loss, reduction of income, or an increase in operating expenses. What this is not, you're not going to get coverage for homeowners not paying their assessments. But say you're a large property and you have an office and you have on-site management or employees that work in that office, and there's a loss or some sort of claim that ends up making so that office cannot be used. So you have to get a portable office and you put it out in the parking lot while you're rebuilding. Well, if you have this income type of exposure insurance that we'll talk about in a minute, then it will cover the cost of that. Also, we have some associations that have beautiful large clubhouses that they rent out to the general public for wedding receptions and parties and those kind of things. You have a claim there, you have to cancel a reservation, you lost the money, then now that revenue doesn't come in. Also covers that. So business income insurance, assessment fees, receivable insurance, and extra expense insurance are some of those. So there is an assessment fees, receivable insurance. We don't have any clients who purchase that. It's very minimal. Basically, it's not someone not paying their assessment because they're having hard financial times. It's that they're actually can't pay it at all because of a major event. Personnel exposures, these are for employees and possibly volunteers. And so if you have volunteers who are out in the community doing work and then they get hurt, say you're having a community planning day and someone trips and hurts themselves, that's a personnel exposure, and you would need risk management techniques for that. And that comes in the form of workers' compensation insurance and employers' liability insurance, which is if you have direct employees, more direct employees, and there's some sort of a discrimination or harassment claim, then the employer's liability insurance would cover that. Don't be confused. You can call workers' compensation fund and insurances sometimes, and they're like, you have no employees, we can't insure you. That's not true. They have a volunteer type of package. Sometimes they have to put a dollar value to it, but then that will protect those volunteers who aren't actually getting paid when they're doing their volunteer assignment, and if they unfortunately were able to get hurt. So management role, our role in this whole exposure insurance process is we're advisors, right? So we're going to give you a lot of bids from insurance agents, multiple bids, and best practices. The best thing, though, is just have those insurance agents. They love to come to the meetings and talk to you virtually or even in person at an annual meeting. And we'll go over the insurance requirements for your association and answer any questions. We're also 24/7 here, right? So this helps you if there's water damage happening to be able to get a hold of someone. You don't have to wait till the office doors open at 9 a.m. on Monday morning. You can call at 3 in the morning and reach somebody, and that helps to get the water turned off or the situation under control to minimize the size of the loss. Always, and health and safety is always going to be our goal. You'll see in our management agreements that when it comes to health and safety and property value, we don't, we're going to try to get a hold of the board, but we're just going to try to take care of the issue first and foremost. So plan now, right? We want you to plan now, and that's risk management, right? What can you do before damage occurs? One, review and understand the governing documents. What are your maintenance obligations? What's common area? And what are the requirements for insurance? And then review your insurance policies and understand the coverage. Man, I just got a renewal on my home, and it's like 118 pages, tiny font, front and back. But you need to really go through that, find a time when you have some free time, go through it and highlight and underline and understand what your coverage provides and doesn't provide with your association policies. Once again, if you have an annual meeting, invite the insurance agent to zoom in to your board meeting. They can also help you go through that. Be proactive, develop maintenance charts and plans. So be preventative maintenance and proactive maintenance. Have an insurance chart on a flow chart of what's going to happen. Have a policy on water. Water leaks are the most common claims. And remember, what will increase your insurance more than anything else is number of claims. So you could have $1 million loss, and or another community could have 3 $20,000 losses from water claims. The community that has the 3 $20,000 claims is going to pay more in the long run, and they're going to lose the insurance because it's frequency of claims. It's not the total value of adding all the claims together. And so have a water leak policy and says, when there's water leaks, this is exactly what the association requires you to do. You will attempt to turn it off. You will contact the management, and all those different things. And our managers can help you with those policies. And then if you have amendments that you need to put in your governing documents that says, here's the things to do. Unfortunately, there's a lot of bad actors out there in the water remediation services vendor industry. And you call them up and you call them up and they just like, oh, this is a freebie. There's going to be insurance. We're going to do all these things, and a water claim can get really high. Where we have association approved and vetted companies that we recommend that you use. You make that part of the policy, then that tells hopefully people to drive their business there to help with the total size of that claim. So don't forget, right, risk management, the process of making and carrying out decisions that will minimize the adverse effects of accidental losses. So this is all risk management. We give it the Insurance 101 title, but it's risk management is really what we're about here. But if we did risk management, half of you wouldn't have joined in today. Review the policy. Who's insured? What's the time period of the policy? What is insured? What's covered loss or peril insured against? So what events? What's excluded? That's the big thing. And what is limited? So we want to make sure that we understand all those things with our policies. Now, There are only 3 insurance agents in the state of Utah that we recommend our clients go to, and that's because of this. They are CIRMS, Certified Insurance Risk Management Specialists. And just like your community manager attends national courses and earns designations through exams and case studies, insurance agents can go through a similar idea of education, many hours, and can earn this CIRMS designation. And there are only 3 in Utah, Buckner Company, Century West, and American Family down south in the southern part of Utah that have earned this designation. They all have the experience. They're specialists in this field. They know about community associations. They are easy to work with and get claims processed. They're partners in CAI and in IRAM and our trade organizations, highly thought of, licensed and bonded. So that always, people say, oh, well, I've had this insurance agent, he's been taking care of my family for 20 years. That's great. Use them for your personal insurance needs. Don't use them for the association. You might get away with it for a while, but eventually there's going to be a claim and it's going to end up costing you money. So in the long run, by not having an insurance agent who specializes and only works in the community association field. Well, that's our presentation for today. So if you have questions now, raise your hand and I will turn on your ability to ask the question, and I will do my best to get you an answer. So let's see if we see anyone. There we go. Elaine, I'm going to turn on your microphone. Elaine, what's your question? Looks like you might need to unmute. There you go.
I'd like you to repeat those 3 companies that are the CIRM.
You bet. You bet. So it's Bayat Kozlowski at Buckner.
Oh, how do you spell that?
A lot of vowels and consonants is in there, but Bayat it's Beat, B-E-A-T, and he's with Buckner Company. And then Lamond Woods with Century Company, SENTRY is he's out of Utah County. And then American Family, Luke Udy, U-D-Y, out of Southern Utah. So different products, right? American Family is what we call a direct writer. If you go to American Family, you just get American Family. That's your option. Century and Buckner Company are independent agents and will get you bids from multiple insurance companies.
And Elaine, this is Jessica Reed. I'm our CXO. I'll go ahead and include those names in the follow-up email you guys will get, so you can have that as well.
Thank you.
Didn't get them down.
See, there's smarter people than me. Thanks, Elaine. And then John Webb. There you go.
Did I get it? So
you did.
So quick question, and Monica with FCS has been helping us, but I just want to spitball or brainstorm real quick. Understand the other day a vehicle ran into our building here, one of the townhomes, and so my understanding or my perception would be the homeowners or the auto insurance would ultimately be the trigger for covering that.
Yes, exactly. It wasn't an association vehicle. It was just a random residence vehicle.
So is it so would I need to help emphasize or police whether or not they actually move forward with the insurance claiming and covering that? And would they be reaching out to FCS, or would or is it possible nobody could be aware of it. They could, the auto insurance would just take care of it. Someone would come out, do a bid, take care of it, and everyone would move on.
Yeah, the auto policy is going to want the association and Monica and the board to, you handle the repair and then submit to them for reimbursement of that. There was something that you said. So you don't necessarily have to file a claim on your policy, but if they did not, if the person, the vehicle's auto insurance, or they didn't have it, or if they weren't cooperating, then you could file a claim on your insurance, and then they're going to go after them. So if we have the information readily available, a lot of times, unfortunately, what it is kind of hit and runs. We don't know who it was, but if we know who it is, we can get a police report or contact. You can initiate a claim on their personal automobile insurance to make sure that that gets covered.
Mm-hmm. Yeah, and that was my curiosity, is there a waiting period that we would do to see? I don't know if he has auto insurance. I don't know any of those things. And so I would.
But you do know who it was?
Yeah, it just happened to be a person that's long-term renting. It's not the owner of the facility. It's a renter of the owner of the townhome.
Yeah, so someone will need to contact that person and say, hey, what's your insurance information, and then get that claim filed. So yeah, Monica can definitely help with that.
Yeah, and she is. I want to make that clear. She gave some good input. I just wanted to toss it from your perspective. So thank you. Yeah,
you're welcome. Thanks for joining us today, and happy birthday to Monica this week, who is excited that her Houston Astros are in the World Series. She might be more excited if they don't give up 5 home runs in the first 5 innings. Any other questions out there today? I don't see any other hands up. Give another second. Thank you, Elaine and John, for being brave and jumping on and asking your questions. If you have questions, feel free to follow up. You'll get an email from us afterwards. Jessica has offered to put the 3 CERMS agents here in the state of Utah in there. Arizona has a dozen plus, and Idaho, I don't know of any that are in Idaho, but I think Buckner and Century both do business up on our Idaho products. So we appreciate you joining us today. If you have any questions, send them in to your community manager or into the information in the email. Otherwise, we hope you drive safe out there and stay warm. Enjoy November. We're done. We're on our holiday break, and we will be done with the courses until we get back together in January. Look for information coming out. There will be, there probably was a slide I was supposed to show, and I will pop that back up right now before I get in trouble. There we go. You can put your phone up, and that QR code takes you to a survey. Excuse me. We want your input. What kind of courses would you like us to teach in 2023? So please go. And this information will also be in the post-session email that is sent out to all of you who are watching this live. But we are very interested in, and that's how we set this year's calendar, and that's how we'll set next year's calendar. So let us know the things that you would like us to educate about. All right, that's it for today now. We appreciate you, and thank you for joining us, and we will catch you next year. Happy holidays, everyone.